Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. This week has been a light week on Palantir news, particularly because we have earnings in a couple weeks. I'll have my earnings preview video out in the near future, probably next week. And we had earnings with big tech. Tesla and Google started off this week, so not too much news in the context of Palantir. However, I want to focus on a couple things on this episode: stock price action, and give some of my thoughts on what the stock has done. It has been a bit of an emotional roller coaster in the broader markets this week and with Palantir. And then a couple of smaller mini partnerships you might have missed that you haven't seen that I want to talk about because those got announced this week as well. Let's get into it. Okay, so let's talk a bit about the stock and what's happened with the stock. I'm looking at the stock right now. It's Friday, July 26, 2710. We're holding that 27 level, which is really, really nice to see. But we weren't holding that all week. So if you look at the 5-day chart here, we basically got to the low 26s, and then at one point 25.42. This was on Wednesday, and when this happened, this was primarily because of, or actually this was on Thursday, this was yesterday. This was primarily because we saw a lot of weakness this week in the context of the broader NASDAQ. So if we look at what we saw this week, let's actually do a monthly view here. We topped out at 29.83 last week, and for the majority of July, last time we were at 23 or below 25, it was in June, and then since then we ran up 29% or 24% up to $29.83. And then we hovered for a good week or two in this 29 to 28 range. We really 27.50 since July 5th up until 29. And then this is the big red candle you got as the NASDAQ fell 3%. Right here at 25.42, we bottomed out. We had a big red candle there from 28.50 down to 27.75, and then we really collapsed here at 25.42. Now, when this happened, the NASDAQ, the QQQ, had its worst day since December of 2022, falling 3.5%, when a tech-heavy ETF, the NASDAQ right here up about 1% of the day, 0.72%, when a tech-heavy ETF falls like that, along with the S&P, which is up 1% today, it fell 2%, and it broke the streak of the longest time it hasn't gone without falling 2% in a day. When the S&P and the NASDAQ fall, everything's going to fall. Palantir was susceptible to falling as well. So Palantir fell to 25.42. That was the dip, if you believe that that was all the pain we were going to face over the coming months, and now we're back here at 27.09. So I say all of that to say the price action to me has been really strong. If the NASDAQ and the S&P continued to fall, I think Palantir would be closer to the 24, 25 range, not really because of anything fundamental about the company. Nothing changes about the company, no downgrades, anything like that, but rather the market needed a little bit of a breather. And as a result of that, Palantir would take a hit. Markets have rebounded. We'll see if that holds up next week. We've got a lot of data coming next week. We had core PCE this morning, and PCE was good. It was a little bit hotter than expected, but the rest of the numbers came in line with expectations, so the market really didn't care too much. If the markets continue to fall, Palantir would continue to fall, but there was no Palantir-specific reason that Palantir fell. We're going to see on earnings in Q2, August 5th, what happens with Palantir themselves. Now, why did the NASDAQ take a bit of a dip? So a little bit of macroeconomic analysis here. I think there's a variety of reasons. The number one reason is honestly because July and August tends to be a tougher month for the markets, and September as well. The end of July going into August, September, it's not the easiest for the markets. The beginning of July is great, and then when you get to the end, things seasonally just don't end up as strong. And part of the reason for that is because of the election uncertainty that we're going to see as Kamala Harris ends up being the presumptive nominee against Donald Trump. Another reason for that is because, hey, people are just like tired and they want to secure some profits. I mean, if you're sitting on a healthy average on Palantir, Google, Tesla, and the stocks have run up dramatically this year, Palantir up still 70% year to date, 65%, and you might see some weakness there, you might want to protect your profits. You might start selling. Institutions might want to reposition outside of tech into something like small caps that's starting to gain momentum. There's a variety of reasons for why going into that August-September cycle, you just see a little bit of weakness for stocks. The difference is this year has been an incredible year, a phenomenal year. It's been really the year of AI being the tailwind, even though interest rates have been the highest they've ever been in the United States in the past 40 years. That has not stopped the consumer from spending. That has not stopped the labor market from being strong. It's getting weaker, but it's still strong. And that has had an overhang of rate cuts that will be an additional tailwind to the broader market that's probably going to start in September. So you've got this entire economy that's propped up on AI. The earnings have been there to justify a lot of those numbers. And if you didn't have good earnings, you tanked, just like we saw Palantir in Q1. I thought they had good earnings, not phenomenal earnings, decent earnings, but they still tanked 20% because the market is not rewarding any company that's not putting up results. So all of that to say, going into earnings, we are heading into a choppy macro environment where I don't know what August is going to look like. If you put a gun to my head and said, hey, what do you think is going to happen? I can't tell you if we're going to go up or down. If I had to guess, I would say we probably end a little bit more positive because it is still a bull market and the market wants exposure. Money market funds are coming off the sidelines. We're probably going to see anticipatory money entering the market before we get a rate cut in September. However, we could get some real choppiness. And we get some real choppiness, get some real fear into the market. People start selling, and you start looking at the S&P getting back to 520, the NASDAQ getting back to 430. At that point, Palantir would probably definitively be at 21, 22. But is that going to happen? No one knows. And so we're going to have to see if that plays out. The price action from Palantir bouncing back to 27, I think, has been phenomenal. It's really proving that high 26, 27 range is a floor. And as long as the market does not tank, because if the market tanks, everything tanks, then Palantir should be able to survive in that range, which is exciting because that is up 65% from that $15, $16 range that we had in January. Okay, now 2 more things I want to share. We did get a new partnership with LifeWallet. Shout out to John. I'll put their Twitter in the description for sharing this. LifeWallet completed the first version of the company's clearinghouse solution through its exclusive partnership with Palantir, providing real-time data-driven solutions that focus on data from patients, attorneys, healthcare providers, and healthcare insurers, as well as property and casualty insurers, all designed to build an expansive repository of data that can be used to determine medical conditions as well as payer obligations. This enhances LifeWallet's chase-to-pay model through an ongoing partnership with Palantir, utilizing Foundry. Now, we knew that LifeWallet was working with Palantir for a while. I think this news broke actually a couple months ago, but this partnership kind of secures the partnership in terms of what they're doing and how they're working together in the healthcare space. Now, LifeWallet themselves is actually a public company, LIFW, MSP Recovery. That's actually the broader name of the company. It was up a lot this week. As you can see right here, we've had some spikes. Let me go to the monthly. Yeah, so we had a spike to 97 cents the day this came out after hours, this PR. So we were at 40 cents. We went up to 97 cents. Again, this is a $57 million public company. This is not a company you try to chase, even if it's associated with Palantir. Same thing with the Palantir SPACs. Like, you can really get burned doing that because at the end of the day, you know, these are smaller companies. But since then, it has fallen a bit, and now we're at 40 cents here. The good thing to see here is that even though it's a smaller company, $57 million company, they are working with Palantir. And the reason they're working with Palantir is probably because they see value in Palantir software. They see value in paying for Foundry, and they don't need $50 trillion to pay for Foundry like some of the bigger companies have. They probably worked out a deal where they're paying a couple $100,000 a month, I'm imagining, if the market cap's only 50 million, and they're getting value from Palantir Foundry. So we want to see Palantir working with these smaller companies. We want to see these companies that are public survive and, you know, get their stock out of the penny stock range because of the efficiencies that Palantir is creating for them. But in order to do that, Palantir has to scale into those SMBs. So it's nice to see that Palantir is working and expanding their partnership with LifeWallet. Now, another thing I want to show was a video that John also found, and we're going to share it right here, with the co-founder of Airtable. Now, if people don't know what Airtable is, it is a $11 billion company. They raised that $11 billion valuation back in 2021, at the end of 2021. And Airtable essentially, I mean, this is the website right here. It is accelerating your most critical operations inside of a team via transformative no-code apps. So the company is deploying enterprise solutions through a variety of operational workflows via no-code, and they are used by thousands and thousands of companies across the entire world. Now, the founder was on a podcast, and the founder said some very interesting things about their use cases along with what Palantir is doing, and I thought it was pretty interesting. So here's the founder actually speaking about them in comparison to Palantir and what he thinks the strength of Palantir is, especially in the context of their boot camps, and also what he thinks Palantir's value is in the broader enterprise when it comes to AI. Here we go.
That, you know, you'll have some use cases addressed through solution companies that can be very big, each individually. And yet, you know, I still think even if you added all of them up, they're still tapping into such a small fraction of, all of the actual departmental workflows and processes that are happening within the enterprise. So like to attack more of those, I think you need an approach that looks more like an Airtable, or on the very heavyweight side of things, a Palantir, which is going in and doing these AI boot camps, AI workshops, and like in a very Palantir-y kind of way, like going very bespoke and very hands-on in terms of actually building, an AI process or AI automated process for a customer. But I think, there's going to be like very, very heavyweight use cases you can do that way, or you can do with your own in-house teams. But then there's still a massive long tail that in aggregate, I think is like, trillions of dollars of economic, value or labor value equivalent that is just waiting to be solved for with, a platform that has data, that has workflows, that has human in the loop capabilities, and yet also allows for really flexible modeling of, where do you put in the AI? What are the inputs? What's the prompt? How do you define the outputs in a way that is resilient to error so that you can have humans take the output, edit, approve, and then chain that with other either LLM calls or human steps or automation steps?
When you were doing this, year-long beta with 1,000 customers, and trying to give them some, like, obviously work on real workflows, structured recurring processes, as you said. Did you figure anything out about how to give other people, like you've been looking at this for a long time, any frameworks for how to give people intuition for what today's models can do, either like in Airtable, because you guys have to have the expertise, or in your customer?
The short answer is we've been trying to do a number of things to kind of codify that and scale it beyond like one-on-one bespoke, interactions, right? Because we can't be like Palantir and go really, really, forward deployed for every customer. So one is we actually now run this AI workshop program. It's a lot lighter touch than like the Palantir AI bootcamp. But, for instance, we just had one in LA. We had like, probably 60 people from all kinds of companies, a lot of media companies, some like retail, big like retail companies, et cetera. And it's a full day kind of masterclass in first, really just teaching people like, what are these transformer models? Why have they gotten so much better recently? I mean, looking at literally this slide of, parameter count of these models from like 5 years ago to now, from GPT-1 to GPT-4. And obviously parameter count is not the end all be all. And now, smaller models are actually doing really well. But I think it just kind of illustrates to people like, what is this thing that now everybody's talking about, and why now? Is it just a fad, or is there like a real foundational kind of technology, kind of improvement, sort of like with the 8086 processor, that has made this the time to actually pay attention and care, and like there's no turning back now, right?
So that's the part of the clip that I want to show that I thought was really important. I think there's a lot of insights there in the context of understanding Palantir. Number one, he's talking about Palantir boot camps and even saying, hey, Palantir is doing something very interesting in terms of how they are going into these enterprise clients and showing them all the different operational workflows they can have by implementing AI within the enterprise, along with Foundry and the ontology, etc. And that's creating a massive amount of value. What he says is trillions of dollars of value. And the question simply becomes, which companies are going to adopt a much more thicker solution like Palantir, or more streamlined solutions like something like Airtable in terms of what they're providing. So that's the first thing. But the boot camps is starting to be recognized by industry leaders like the co-founder of Airtable that understands the value of showing why this is important. Number two is the argument he's talking about, which is there are thousands of workflows in the enterprise that have not been unlocked. If you just go to Palantir's AIP Now website, they have an entire, basically centralized hub of different things you can do. They have a customer service engine, AIP process automation framework, AIP for accounts payable automation, inventory rebalancing, dynamic scheduling. I'm reading from the website right here, but there are so many different modules that exist for so many different types of enterprises that his argument, as you saw in the video, was, hey, we have a lot to be able to explore, which equivocates to trillions of dollars of value ultimately for the enterprise. And if we have these trillions of dollars of value that are going to be unlocked in the enterprise, the question is going to be, what are the processes by which an enterprise, a BP, an Airbus, etc., engage with an Airtable or a Palantir to be able to implement that software in the enterprise to get the ROI to justify paying XYZ amount that they pay to Palantir. And at the end of that clip, when he says, hey, we are just beginning, and the entire world is starting to see these foundation models. Meta just open sourced a 450 billion parameter model that is rivaling GPT-4o, which really matters because Meta is open source, GPT is still closed. You start to see the models truly become a commodity. And if all of the value in the enterprise is through these workflows, which the models are going to be a big part of, but they're not just going to be a chatbot, they're going to be a computational infrastructure to push the operational workflows to actually make sense, to drive value in the enterprise, no matter what type of different workflow you're looking for, then whether it's Gemini, GPT, Llama, Anthropic, whatever it may be, it's going to be a model that's connected to the business data. And then you need something like an ontology, i.e. Palantir, or, in smaller cases, smaller use cases, Airtable, to make all of that make sense and unlock those trillions of dollars that exist in the enterprise. And there's just so many different ways you can unlock that value, but the organization, the enterprise, has to A, be committed to unlocking that value, and then B, recognize what are they paying for and how they're going to get the increased operating margins, the decreased cost, and the overall increased top-line growth. If we're in the early stages, that clip right there, I think, is a prime justification for why Palantir is getting a premium from the market. The market believes that growth is not going to slow down in terms of where the enterprise space is going. And companies like Airtable, Palantir, Snowflake, Datadog, they're all vying to try to get it. Karp's argument is, hey, let's take the market. If Karp ends up getting a decent amount of the market, Palantir is going to have one of the most useful softwares on the planet for governments, which I think is a big part of the thesis that, only hypercharges the argument for Palantir, and for enterprises, because the workflows are only getting started and they're being unlocked day by day as these foundation models start to attract the attention of CTOs, CEOs, COOs, and the broader public to figure out what can we do with these models that can make our organization more effective. And if Palantir is the answer to unlocking a lot of those answers for the organization, for the CTO, CEO, COO, I think we're just going to see more boot camps. We're going to see more conversion. We're going to see more top-line growth. Maybe it's not in Q2, but it will be happening, in my opinion, over the coming years. And when that does happen, I think there's a lot of value that goes back to Palantir. All right, that's it for me. Thank you, everybody, for listening and watching. Hope you guys enjoyed this episode of Daily Palantir. We'll be back with more content. We've got earnings in 2 weeks, so we've got a lot to discuss. I'll have my preview video out to next week, and we'll go deeper and see what we got going into Palantir earnings. Thank you, everybody, for being here. I'll see you guys in the next one.